on the way. Yo, what's going on? I'm about to go hit the gym. We're bumping right now, pre-workout. Just got done trading. I'm gonna break down to you guys a beautiful lesson, a quick 5-minute lesson. I'm gonna call it on fair value gaps, one of the biggest game changers that I added to my trading. I hope you guys enjoy. Before I get copyrighted, I'm going to the gym. I'm gonna show y'all my live. Deuces. So we're gonna be going through a chest workout, chest and some little bit of shoulders, right? We're gonna be talking about trading. We're gonna be talking about through the workout, and then we're gonna actually get into the actual, charts, right? Explaining fair value gap, explaining them how I use it, when to use them, how not to use them, right? Fair value gaps, basically coming from the ICT model. It's been the biggest game changer on my trading, and I love it. I feel like I've been much more profitable since. This is how I usually really got, funded by Top Step, right? Was one of the biggest key components was using fair value gaps, not just area support and resistance. But we're gonna run through the workout. Do this. Warming up here. Warming up here with the peg deck before we get into a big pressing movement. Taking the light, upping the weight every time. But when I get towards the last 2 sets of me doing this, like I'm actually going pretty hard. I'm not really warming up at that point. It's like actual sets, but it's still the warm up. Trades today is Monday the 26th of August, right? And you can see a big sell-off on NQ right here, right? No, focus on me. You can see, anyways, you see a big sell-off there. That's basically what happened at the New York Open. I tried to reverse. I tried to go against it, right? Once it swept, once it finishes move down, I tried to long it, and it went through, but I never took profit, so we ended up break even. I'm gonna show you guys on the charts before we get into the actual lesson. But Monday, no news. I go low risk anyways, and this is usually what happens, right? After the big drop, you're gonna see it just consolidated at the bottom. So, it's Monday. Hopefully for the next week, we can get really nice setups. And yeah, I'm kind of bummed out about it because, you wait for the weekend to be over to finally trade personally, and you get nothing on Monday, so I'm sick. 'So, first big pressing movement, I'm doing an incline dumbbell. Just because I haven't done it in a while. I've been doing like a Smith machine press, but still warming up. Even though I already did a warm-up workout, I still get warm-up sets on anything I'm really doing, right? Trying to hit my chest, a little bit of shoulders today. Beautiful out. So yeah, warm up with the pec deck, incline dumbbells, warm up. Gonna go heavier, 65s. This gym tops up at 75 dumbbells, which is kind of annoying. Six to 8. I lied. That was my top set. I'm out of breath. Because we can't go heavier, I'll probably do that one more time and then we'll back off. And then we'll do some accessories, like some flies, some peg deck, some shoulder flies. Damn, they could have just told us that. I don't mind.
Yeah, I know. I don't know who called. I tried to speak.
Yo, so they tried to say I can't record, but fuck that. I think someone complained they weren't comfortable, which doesn't make sense, because you were better off just telling me so I don't get you in it. Because now I don't want to listen. Bro. So, anyways, we warmed up with the pec deck, then we hit incline dumbbells. You guys saw me hit my heavy set. I hit the heavy set again. I just didn't record it because the cop came in and said I couldn't record it. So now I'm gonna in my shoulders, but I'm like, fuck it, I'm gonna do shoulders and biceps. So there's gonna be chest, shoulders, and biceps. Fuck. Fire. Again, make sure you're going up every set. I need a haircut, but it's almost my birthday in 2 weeks, so I'm just gonna wait for my birthday. But that shit looks crazy. But lighting right now is fire. New York Open drops. Consolidates for the rest of Monday. So what I was saying is, Mondays there's not much movement. It's kind of annoying because I wait the whole weekend to trade and then you get no setups. And that's pretty much Monday. When you have Monday and no news, you lower your risk or just be careful. Today I took a trade and I ran to break even, right? Because of these conditions, and rightfully so. Price was consolidated. So, we probably would have lost a full percentage of what we risk. But, it's Monday, so you got to keep those rules in check. And that really saves you, in terms of capital preservation. So really nice. Days before, weeks before, you don't recognize those kind of things, especially when you're less experienced. Those are the things you kind of start to realize. You can't trade on this day, risk less on this day, risk more on this day, So, Monday blues. That's what we're gonna call it, the Monday blues. Make an ICT course program. That sounds fire. You could break down ICT into structured programs and chapters, or me, it'd be a game changer. You save so much time to go into ICT's, mentorship, where he talks so much, which is usually the problem with his mentorship. You see a lot of people struggling with his program because he talks so goddamn much. But shout out Mike, because that motherfucker can trade. It's crazy. So we kind of wanted to put together a little ICT Bible, ICT checklist of everything I learned and I use, and make it more structured, make it a short course, right? Make it a short 10-chapter course, right? Packed with information. That sounds way more, efficient than the current phase I have right now. This is like 40 parts. But when you learn, this is, to take to someone, this is to take that, the course that I made that a lot of students have taken and enjoyed. It takes you to trading, right? It takes you to the basics of trading, how to learn, how to trade, like what it even is. Like literally step one. Like if you walk into a room with zero knowledge of trading, you'll walk out of there with pretty much a lot. So we're making an ICT version that follows phase one is something I really am interested in. If you guys are interested in that, to a short ICT course lesson that's actually gonna be long, just short chapters. Less chapters, more content, comment down below. Anyways, you know what? If you guys are thinking, bro, this dude keeps talking about his trading and what he learned and what he uses. Yeah, because I'm fucking confident in it, and I'm happy about it because I've been grinding. You guys been with me on YouTube for like a year and a half, but I've been trading for 4.5 years. I've blown FTMO accounts. You guys seen where my first video was with FTMO channel. If you guys saw that video and know my story, I blew 11 challenges before I finally made one. And I got paid out. So yeah, I'll keep talking about it because I'm happy about it. Yo, I love to teach my students that. I love, to share the knowledge that I get, and I really mean that. I really truthfully mean that. I don't care if y'all don't believe me or not, but like, bro, I got 2 best friends who trade, man. Whatever I learn, they're mad busy with work and stuff. Whatever I learn, bro, I literally go on my way. Text them a whole paragraph, yo, boom, 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 watch this, listen to this, or I'll make a video for them. It's just who I am. So that's why I'm like, yo, I can't wait for you guys to, see this. I dropped the liquidity videos. Even before that, I was dropping videos on how I got, of my exact strategy that I also broke down on the FTMO channel. So that's why I keep talking about it. But anyways, we're gonna wrap up this workout. Last thing I'm gonna do is dips. You guys are gonna see me do dips, and then we're gonna go over to the charts. So yeah, see you guys in a little bit.
Okay, now let's look for a fair value gap. This is actually market open, so this is perfect. Monday at 6 p.m. So 6 a.m. So this closing candle, it closed up here at 10 a.m. Right? There's nothing here, but we're gonna go to the next candle. Boom. And this is going to actually activate a fair value gap. This is going to create an imbalance in the market. Now, how do you tell an imbalance in the market? The importance between these is going to be a 3-candle pattern, right? It's going to be a 3-candle pattn. Now, what you want to look for is for the wick on the first candle and the wick on the third candle. If this wick, as long as this wick isn't infiltrating, as long as the third candle wick isn't infiltrating the first one, like that, it is a fair value gap. So let's just pretend that this is the wick of this third candle. This is not a fair value gap, because think about it. Think about it this way, the easiest way. There is no gap between the first wick and the third wick, okay? Does that make sense? So right here, the wick for this candle, or it doesn't have one, but you know what I mean, is right here, and the wick for this one is right here. There is no fair value gap there. All right, so let's take this away and let's look at the fair value gap here, right? The first candle's wick is down here, right? The third candle wick is up here with the trend. So we have a fair value gap. The bias is bullish. We're pushing up, okay? You guys will learn about this. We're gonna target up here. So let's see what happens here, right? Basically, when you have this fair value gap, and what you do from here is you wanna look for a rejection here. The rejection can happen in the first quarter. The rejection can pull in deeper into the half point, which is the equilibrium point, right? Or it can completely retest the entire fair value gap, right? Price is now into our fair value gap. Price rejects, okay? You probably could enter as it starts breaking back above, all right? I would, of course, have my stops. Under the entire fair value gap. That's how I personally use the fair value gaps in terms of stops, okay? Would I take this entry? No, because the risk reward doesn't make sense. So obviously, in this scenario, I would probably wait for price to pull back into this area and see if I can get a better entry. So let's see what happens. And price does tap back into this fair value gap, and price taps back into this fair value gap during our session now. The difference here is price, now we have a better risk reward here, okay? So you notice how price ends up doing a full fair value gap retracement, okay? Price pulls all the way back into here. It's 9 a.m., so this is our trading time. Remember, we did not take this one because the risk reward wasn't ideal. But if you think about it, even if you took this entry, it was a bad entry because you're holding for a whole day, but your stops are still safe because of the fair value gap. You know what I'm saying? So now you have a full retracement into a fair value gap. It is now the next session, right? Now, you're looking for, price action. What we learned in phase 1, you can see that price is moving bullish. You can enter a position there with the same stops that I had for the first position, right? And then we're going to keep going. Let's see what happens. And price flies, right? Perfect right here. But again, remember, if you took this entry, right, your stops are under, price hits targets. If you take this entry, price hits targets. This is beautiful. This is a perfect explanation of price rejecting the entire fair value gap. Your entry is just going to depend on your preference. I'm going to move, but I'm going to wait for price to come up into this fair value gap on the H4 time frame and go short with my buys. All right, we're going to go to the 1 hour time frame. Price retests our fair value gap now, right? Once price is in our fair value gap, I actually go down to the lower time frames now, M5 or M1. Structure shift, right? Market structure shift on the 5 minute. Price is retesting our fair value gap now, 1, 2, 3. Price is pushing up into our fair value gap. I love when that happens. Boom. You guys remember that market structure shift area I pointed? Now that's where I would take that entry, right? As it broke under through there, okay? Let's see what happens though. Now you could set your stops above here. That's very aggressive. I'm still going to do the entire fair value gap. Now let's see what happens actually. I don't like that wick on. Oh wow. Oh my God. It's right here. Again, what are you looking for? 3 candle pattern. 1 candle, 2 candle, 3 candle. First wick, second wick. There is a gap. There is an imbalance. Boom, boom. right? Now again, this isn't support and resistance where you want to mark off every support and resistance that you see. Okay, that's not what we want to do. You don't have to mark off up here. Up here, you kind of want to look at where you're trading at. That's usually how I go about it. And if you see right here, this is actually a fair value gap being respected right here. You see that fair value gap right there. Wick, reject, and then price pushed up. So now we have another scenario where we have a fair value gap in here. Now let's see what happens to this fair value gap. Okay, this fair value gap looks to be heavily disrespected. Okay. Right, I'm trying to give you guys a bunch of scenarios. What happens when it gets disrespected? What happens when you have two? What do you do when you have a perfect fair value gap? I'm literally telling you guys as much as I can in this video. So price is now rejecting to the upside. We're going to go to the lower time frame. All right. And look. And look, price ends up dropping. So again, look at this fair value gap being disrespected again. I literally told you guys, I hate when price disrespects fair value gap, right? Because again, it closed back above, but look at the reactions it has. It just drops, it's just dropping. So if you see this especially on a 4-hour time frame, if you see price completely disrespect your fair value gap like that, I'm telling you right now, it is not going that way. If you guys have any questions, let me know, and I'll see you guys later. Deuces.